Look, if you're holding 100 ounces of silver right now, what I'm about to share with you isn't just important. It could be the difference between watching your wealth multiply or missing the biggest opportunity in precious metals we've seen in decades. Because something extraordinary is happening in the silver market right now, something that's been building quietly beneath the surface. And the people who understand what's coming are positioning themselves right now, today, while there's still time. Let me paint you a picture of what's really going on. Silver just crossed a threshold that hasn't been seen in years. We're watching prices surge past levels that most analysts thought were impossible just months ago. But here's what's fascinating, and what most people are completely missing. This isn't just another price spike. This is the beginning of something much bigger. You see, silver has been in a supply deficit for 5 consecutive years now. Think about that for a moment. 5 years where the world has consumed more silver than it's produced. That's not a temporary imbalance. That's a structural shift in the market that's been quietly draining available supplies while everyone was distracted by other things. And here's where it gets really interesting. The industrial demand for silver isn't slowing down. It's accelerating. Solar panels, electric vehicles, 5G infrastructure, medical devices, every single one of these growing industries is absolutely dependent on silver. There's no substitute that works as well. And as these industries expand, they're consuming silver at rates we've never seen before. But let me tell you what's really happening behind the scenes, because this is where the story gets fascinating. The big institutions, the ones with research teams and market intelligence that costs millions, they're not sitting still. Central banks around the world have been quietly accumulating precious metals, not just gold, but silver too. They understand something that most retail investors are just starting to figure out. They're looking at the same supply and demand fundamentals we are, and they're making moves. Now, I want to take you back to a moment in history that's eerily similar to what we're seeing today. It was the late 70s. Inflation was running hot. The dollar was losing purchasing power. And silver went from around $5 an ounce to $50 in less than 2 years. People who held just 100 ounces of silver saw their position go from $500 to $5,000. That's a tenfold increase. But here's what's different this time, and why this could be even bigger. Back then, silver didn't have the industrial demand it has today. It was primarily an investment metal. Today, silver is absolutely critical to modern technology. It's the most conductive metal we have. It's irreplaceable in solar panels. It's essential in electronics. And the world is consuming it faster than we can mine it. Let me break down what's happening in the physical market right now, because this is where things get really interesting. Coin and bar demand rebounded significantly, with investment demand reaching over 200 million ounces. That's physical silver being taken off the market and put into private hands. But here's the kicker. The refineries and mints can barely keep up. Premiums on physical silver have been elevated for months. That tells you something important. When you have to pay significantly more than the spot price just to get your hands on physical metal, that's a signal that the physical market is tight. And it's not just retail investors. Look at what the ETFs are doing. Silver-backed exchange-traded funds have been seeing inflows. That's institutional money, pension funds, hedge funds, the smart money, positioning themselves in silver. They're not doing this on a whim. They have analysts running models, looking at supply chains, studying industrial demand forecasts, and they're buying. Now, let me tell you about something most people don't understand about the silver market. It's something that could send prices much higher, much faster than most people think possible. The COMEX, that's the major exchange where silver futures are traded, operates on a fractional reserve system. For every ounce of physical silver in their vaults, there are multiple paper claims on that silver. It's like a bank that has $10 in deposits but has lent out $90. It works fine as long as everyone doesn't ask for their money at the same time. But what happens when people start demanding physical delivery? What happens when industrial users who need actual silver for manufacturing start pulling metal out of the exchange? What happens when investors decide they don't want paper promises? They want the real thing. That's when you get what's called a squeeze. And we're starting to see the early signs of it. Think about it this way. Imagine you're at a concert and someone yells fire. If only a few people head for the exits, no problem. But if everyone rushes for the doors at once, you've got a serious situation. That's what could happen in the silver market if enough people decide they want physical metal instead of paper contracts. And here's why that matters to you if you own 100 ounces of silver. You're already holding the real thing. You're not exposed to counterparty risk. You're not holding a paper promise. You've got the actual metal. And if we do see a squeeze, if industrial demand keeps growing while supplies keep shrinking, the value of what you're holding could increase dramatically. But let me show you something else that's happening that most people aren't paying attention to. The mining industry is struggling. It costs more to pull silver out of the ground than it used to. Energy costs are up. Labor costs are up. Environmental regulations are stricter. And here's the thing about silver. Most of it comes as a byproduct of mining other metals like copper, lead, and zinc. So when those industries slow down, silver production slows down too. We're not opening massive new silver mines. The easy deposits have already been found and mined. What's left is harder to get, more expensive to extract. So you've got this perfect storm brewing. Demand is going up, supply is going down, the physical market is tight, and the price is starting to reflect that reality. Now, I want to pause here for just a moment because if you're someone who's thinking about your financial future, your retirement, your wealth preservation strategy, there's something you should know about. If you're sitting on $100,000 or more in retirement accounts, 401ks, IRAs, that kind of thing, there's a way to get physical precious metals into those accounts without triggering taxes or penalties. It's called a gold IRA, and it works with silver too. I put together a free guide that explains exactly how it works, what the rules are, how to set it up. It's in the description below. No obligation, just information. Worth looking at if you're thinking about diversifying your retirement holdings into physical metals. All right, back to what's happening in the silver market because there's more to this story. Let's talk about what's happening on the geopolitical stage, because this is driving a lot of what we're seeing in precious metals right now. Countries around the world are looking at the dollar differently than they used to. We're seeing trade agreements being made in currencies other than dollars. We're seeing central banks diversifying their reserves. The BRICS nations, Brazil, Russia, India, China, South Africa, they're actively working on alternatives to dollar-based trade. And when countries start moving away from the dollar, they move toward hard assets, gold, silver, things that have intrinsic value. China has been particularly aggressive. They're not just buying gold for their central bank reserves. They're encouraging their citizens to buy precious metals. They're building up strategic stockpiles. They understand that in a world where currency values are uncertain, physical metals are insurance. And here's something that should make you sit up and pay attention. The solar industry in China is massive. They're installing solar panels at a rate that's hard to even comprehend. And every single one of those panels requires silver. They're consuming silver for industrial purposes at the same time they're accumulating it as a strategic asset. That's demand coming from both directions. Now let me take you back to another moment in history, because understanding the past helps us see where we might be headed. In 2008, during the financial crisis, silver dropped to around $9 an ounce. People were panicking. The economy was in free fall. But then something interesting happened. As central banks around the world started printing money to bail out the financial system, silver began to climb. By 2011, it had reached nearly $50 an ounce. That's more than a five-fold increase in less than 3 years. The people who bought silver when everyone else was panicking, when prices were low and fear was high, they made extraordinary returns. Not because they were lucky, because they understood that when governments print massive amounts of money, hard assets become more valuable. And here's what's happening now. We've seen more money printing in the last few years than we saw during the 2008 crisis. Government debt levels are at all-time highs. Central banks are stuck between a rock and a hard place. They need to keep the economy going, but every time they print more money, they devalue the currency. That's why silver isn't just a speculation. It's a hedge. It's insurance against currency debasement. It's a way to preserve purchasing power when paper money is losing value. But here's where your 100 ounces becomes really significant. You're not just holding a commodity. You're holding a monetary metal with thousands of years of history. You're holding an industrial metal that's critical to modern technology. You're holding something that's in limited supply and growing demand. That's a powerful combination. And the signal I'm talking about, the one you need to watch, it's already flashing. Prices are moving, supply is tight, demand is strong. The fundamentals are lining up in a way we haven't seen in over a decade. Let me tell you about what some of the top analysts are saying, because these aren't fringe voices. These are people who've been studying precious metals markets for decades. Some analysts are projecting silver could reach $75 an ounce within the next couple of years. Others are talking about $80 or even $90. And a few are saying that if we get a real supply squeeze, if industrial demand keeps accelerating, we could see silver push toward $100 an ounce. Now, I'm not here to make predictions. Nobody has a crystal ball. But let's do some simple math. If you own 100 ounces of silver and the price goes from where it is now, let's say around $30 to $75, that's a significant increase in value. Your 100 ounces would go from $3,000 to $7,500. If it reaches $100 an ounce, you're looking at $10,000. But here's what's more important than the dollar amount. It's what that silver represents. It's purchasing power that's protected from currency debasement. It's wealth that's not dependent on the health of the banking system or the decisions of central bankers. It's an asset that has intrinsic value because of its unique properties and its industrial applications. Now let me tell you about something that's happening in the derivatives market, because this is where things could get really interesting. There are massive short positions in silver. Banks and institutions that have bet against silver, that have sold contracts promising to deliver metal they don't actually have. This works fine when prices are stable or falling. But when prices start rising, those short positions become liabilities. They have to either deliver the physical metal or buy back their contracts at higher prices. And here's the thing. If enough of these short positions get squeezed at the same time, it creates what's called a short squeeze. Prices can spike dramatically in a very short period of time. We saw a glimpse of this a few years ago when retail investors coordinated to buy silver and force some of these short positions to cover. Prices jumped significantly in just a few days. Could it happen again? Could we see a major short squeeze in silver? The conditions are certainly there. The physical market is tight. Industrial demand is strong. Investment demand is growing. And those short positions are still there, waiting like a coiled spring. But let's talk about something more fundamental than short squeezes and market mechanics. Let's talk about what silver means in the context of your overall financial strategy. Most people have their wealth tied up in paper assets, stocks, bonds, cash in the bank. And there's nothing wrong with that. Those are important parts of a diversified portfolio. But here's the question you need to ask yourself. What happens to those paper assets if we see serious inflation? What happens if the dollar loses significant purchasing power? What happens if we have another financial crisis? Silver is different. It's tangible. It's real. You can hold it in your hand. It doesn't depend on anyone's promise to pay. It doesn't have counterparty risk. And throughout history, when paper currencies have failed, and they always eventually fail, precious metals have retained their value. I'm not saying you should put everything into silver. That would be foolish. But having a portion of your wealth in physical precious metals, that's just smart diversification. It's insurance. And right now, with everything that's happening in the economy, in the monetary system, in the geopolitical landscape, that insurance is looking more valuable every day. Let me share with you what's happening in the retail market, because this tells you something about sentiment and demand. Coin dealers are reporting strong sales. Premiums on popular silver coins and bars have been elevated for months. When you go to buy physical silver, you're often paying several dollars over the spot price. That premium represents the real-world supply and demand for physical metal. And those premiums have been stubbornly high, which tells you that demand for physical silver is strong and supplies are tight. Online dealers are sometimes running low on inventory. Mints are struggling to keep up with demand. The U.S. Mint, the Royal Canadian Mint, the Perth Mint, they've all had periods where they couldn't produce enough silver coins to meet demand. That's not normal. That's a sign of a market that's under stress. And here's what's interesting. This is happening while silver is still relatively affordable compared to its historical highs. We're not at $50 an ounce like we were in 2011. We're not even at $40 yet, but the physical market is already showing signs of tightness. What happens when prices do start climbing toward those levels? What happens when more people decide they want to own physical silver? The answer is simple. Prices go higher. Supply and demand is the most fundamental force in any market. When demand exceeds supply, prices rise. And right now we're in a situation where demand is strong and growing, while supply is constrained and shrinking. Now let me tell you about the silver to gold ratio, because this is something that sophisticated precious metals investors watch closely. Throughout history, silver and gold have maintained a relationship. Sometimes silver is cheap relative to gold, sometimes it's expensive. Right now, even with silver's recent gains, it's still historically cheap compared to gold. The ratio has been coming down, which means silver has been gaining on gold, but there's still room for silver to catch up. Why does this matter? Because when silver is cheap relative to gold, it often means silver is undervalued. And when that ratio starts to compress, when silver starts gaining on gold, it can move fast. Silver is more volatile than gold. It has bigger percentage swings, and when it moves, it can move dramatically. So if you're holding 100 ounces of silver, You're positioned to benefit if silver continues to gain on gold. You're holding the more volatile, more explosive metal, and in a bull market for precious metals, that's where you want to be. Let me paint you a picture of what could happen over the next few years if these trends continue. Imagine industrial demand keeps growing as the world transitions to green energy. More solar panels, more electric vehicles, more 5G infrastructure, all of it requiring silver. At the same time, mining production struggles to keep up. Costs keep rising, new discoveries are rare, and existing mines are depleting. Meanwhile, investors start waking up to the supply and demand fundamentals. More money flows into silver ETFs. More people buy physical coins and bars. The COMEX inventories start dropping as people take delivery of physical metal. And then, maybe there's a catalyst. Maybe it's a major industrial user who can't get the silver they need for production. Maybe it's a geopolitical event that shakes confidence in paper currencies. Maybe it's just the market finally recognizing that silver is dramatically undervalued relative to its fundamentals. Whatever the catalyst, prices start moving. $35, $40, $50. And as prices rise, the short positions start feeling the pain. They have to cover, they have to buy, and that buying pushes prices even higher. $60, $70. And suddenly everyone is talking about silver. It's on the news. It's trending on social media. And more people want in. That's how bull markets work. They start slowly, with just a few people recognizing the opportunity. Then they accelerate as more people catch on. And they often end in a blow-off top, where prices go much higher than anyone thought possible. I'm not saying this is definitely going to happen, but I am saying the conditions are there. The fundamentals support it. The supply and demand dynamics support it. And if you own 100 ounces of silver, you're already positioned for it. Here's what you need to understand about this moment we're in. This isn't just about silver. It's about a broader shift that's happening in the global financial system. It's about the end of an era of cheap money and unlimited money printing. It's about countries and individuals looking for alternatives to a dollar-based system that's showing cracks. Silver sits at the intersection of all these trends. It's a monetary metal with a history going back thousands of years. It's an industrial metal that's critical to the technologies of the future. It's a store of value that can't be printed or debased. And it's in a supply deficit that's getting worse, not better. Your 100 ounces of silver represents a bet on reality, a bet that physical assets will outperform paper promises, a bet that supply and demand fundamentals matter, a bet that when the dust settles from all the monetary experiments and financial engineering, real things with real value will be what matters. And here's the beautiful thing about silver at this moment. You're still early. Yes, prices have moved up. Yes, more people are paying attention. But we're nowhere near the kind of mania we saw in 2011. We're nowhere near the point where everyone is talking about silver. Most people still don't understand what's happening in the silver market. Most people are still focused on stocks, crypto, real estate, the traditional investment vehicles. That gives you an advantage. You're positioned before the crowd arrives. You're holding physical metal before the supply crunch becomes obvious to everyone. You're ahead of the curve. But here's what you need to do now. You need to watch the signals. Watch the COMEX inventories. Watch the premiums on physical silver. Watch what the big institutions are doing. Watch the industrial demand numbers. Watch the mining production figures. All of these are telling you a story. And right now, that story is pointing in one direction. The signal I'm talking about, the one that should matter to anyone holding 100 ounces of silver, it's not just one thing. It's the convergence of multiple factors all pointing the same way. It's the supply deficit. It's the industrial demand. It's the tight physical market. It's the geopolitical shifts. It's the monetary policy decisions. It's the mining challenges. It's the investment demand. All of it coming together at the same time. This is your moment. This is when you need to be paying attention. Not in a year when prices are much higher and everyone is talking about silver. Not when the supply crunch is so obvious that premiums are through the roof and you can't even find physical metal to buy. Now, today, while you're already positioned with your 100 ounces. Because here's the truth that most people don't want to hear. Opportunities like this don't come around often. The last major silver bull market was over a decade ago. Before that, it was the late 70s. These are generational opportunities. And if the fundamentals are right, if supply keeps shrinking and demand keeps growing, we could be at the beginning of the biggest move in silver we've seen in our lifetimes. Your 100 ounces isn't just a position in a commodity. It's a stake in a market that's fundamentally broken and needs to reset. It's a bet that reality will eventually assert itself over paper manipulation. It's insurance against a monetary system that's built on debt and promises rather than real value. So watch the signals, stay informed, understand what's happening beneath the surface. Because the silver market is telling you something important right now. And if you're listening, if you're paying attention to the supply deficits, the industrial demand, the tight physical market, the geopolitical shifts, you'll see that this isn't just another cycle. This is different. This is bigger. And this is your signal to hold tight and prepare for what's coming next.